famous in China, wrote a couple of books about Chinese. She is the Silicon lady, a Silicon Dragon lady. She's always in the... Yeah, it is. And everybody, whenever I go to China and you check it out, her website, she has a lot of connection. Whatever you want to know about China, she has close interview with Jack Ma and other people. I know you're very humble about that. Could you explain what is your brand, what do you do and all this thing? You
Sure.
have a background of a journalist background.
Sure.
Wrote the book about Silicon Valley. Please,
Sure.
she's a good friend of mine. I'm honored to have her. You've been in our first couple in Silicon Valley.
Yes.
Over there, and but we're honored to have you in National Press Club, and thank you.
I'm really happy to be here, and Sydney's a good friend of mine, and we are actually parallel media entrepreneurs. So Sydney has the CrowdFund Beat brand, and my brand is Silicon Dragon. So I cover venture capital and angel investing and innovation, tech innovation globally. And so we are connected because we're both about alternative sources of financing and all about entrepreneurs as well. So in addition to Silicon Dragon, I write a weekly column for Forbes, and I occasionally write for CNBC.com as well. As Sydney mentioned, I've written a couple books and may actually do another one at some point whenever I get time. I do travel a lot to China. I've already been 3 times this year, and another trip in August and another trip in September. So I'm following the whole tech innovation story and the whole growth of alternative financing for entrepreneurs. So Sydney, thank you for inviting me here today. Sydney and I have known one another for a long time through Silicon Valley circles and also sometimes China circles too. So anyhow, our panel today is going to be talking about the future of crowdfunding. And I'd like to give it kind of a blue sky, big picture vision, because we've heard a lot about details of regulations today and a lot of nuts and bolts. But I think it'd be good to look at what's happening over the next 5 years or more. So our panelists today are Craig Denlinger. He's a managing partner of Artesian CPA, and which is involved in audits and reviews and financial offerings. And he's based out of Denver. Yep. And next, from Tampa, Sheryl Hunter, who is a lawyer at Hunter Business Law. And she's back home today because she's a graduate of Georgetown University, the law school here. So, and then finally, we have Blaine McLaughlin, who I believe is here locally from Virginia, right?
That is where I live now. I'd say I'm a SoCal kid.
As a SoCal kid.
But.
All right. He is the COO of Via Folio, and which is an online platform for private debt and equity offerings. And we'll hear more about what each one of them do and what they feel is kind of the future roadblocks for crowdfinancing and also the future opportunities for crowdfinancing. So why don't we start first? Why each one of you say a few words about what you think is the biggest obstacle right now for crowdfunding. Let's just go down the line. The biggest obstacle, just very quickly, because I'm going to ask a lot of questions.
So the biggest obstacle is early stage companies that don't have experience working in a highly regulated environment. Getting in compliance, like Sarah was saying earlier, lots of non-compliance early on. I have lots of clients that made and lots of clients that missed their deadlines because they just weren't prepared and ready for SEC regulated world.
Okay, and these are small business owners, or
Yep.
Yeah. So why would they be prepared, right? Sheryl, what about from your side? You work a lot with small businesses, and I'm sure you have a lot of stories to tell.
Well, I would say from 2 perspectives. I look at this. We're the entrepreneurs law firm, so we certainly look at it from the vantage point of early stage companies that are seeking to raise capital. And anytime you're still in that first to market world, there's higher costs, there's higher barriers to entry. And so I think that over time, some of the confusion about what's permissible, what's not permissible, more clarity from the SEC, more sort of tacit approval of certain behaviors all of that will make the barriers to entry lower and therefore the cost and the comfort level. So I'm looking forward to that stage. At this time, most of our clients are still doing traditional 506B private placement offerings. They're, even after I explain this to them, it's just they just don't have the firepower or the comfort level to do it.
So a bigger barrier to, a smaller barrier to
Right.
entry
And we
would
also
be.
work on the investor side, though. I've been general counsel for about 2.5 years to a platform that raises capital strictly for Florida-based early-stage companies. So I also see the same sort of early stage, getting used to even the regulatory requirements that we have to guide them through. So looking forward to all those barriers coming down.
Okay. Craig, how about you? I'm sorry. Blaine.
So in honor of DJ and recognizing that he's not going to be here to stir the pot as often, I'm going to stir the pot and say there is no crowd. The number of individual self-directed investors with money is negligible, not worth even going after. That's maybe a bit of an overstatement, but let's get it out there. If we're going to raise money for small to medium-sized enterprises, we actually have to go to where the money is. That may be more traditional sources like funds or institutions, but most of the money, if you want to think of quasi-retail, is with registered investment advisors and broker-dealers. That may sound like heretical to say, well, you have to pitch your product or to registered investment advisors and broker-dealers, but that's where the money is. And we can fight that, and we can say, no, a traditional offline paper closing is good enough, or taking that online is good enough, but it's not. To serve those channels, you actually have to put the product into those channels, into the custodial accounts where RIAs already have their client assets, into the broker-dealer networks that already have the clients and the assets. So that's my opening shot on crowdfunding, is there's no crowd. And we need to look a lot more closely at where the money actually is and direct our infrastructure and our efforts around making them aware. Somebody else was kind enough to say it for me earlier. Where are the advisors? So the advisors
So no
are
crowd
waiting
in
for the product.
crowdfunding. Yeah, that's interesting. So I from that I would assume that you believe also that it's not going to go mainstream, or do we believe that crowdfunding will go mainstream over the next 5 years? Will it catch on?
Well, how do you define, open-ended question, how do you define crowdfunding? If it's more people making more investments in companies that they weren't able to invest in before, and hopefully from a risk management perspective in much smaller amounts than you used to be able to make investments in non-publicly traded companies. Writing a $100,000 check is not risk mitigation. It's also not available to most people. Writing a $1,000 check or a $100 check is, as we heard from some of the folks up here earlier. If that's crowdfunding, then it's already mainstream. You can buy Apple, Google, IBM, or any publicly traded security for a very small number of dollars with a very easy online process. And it's already on pretty mainstream in that a number of websites, not just Viafolio, but a dozen others, you can make online investments in small dollar amounts in non-publicly traded companies. Again,
But is this a Main Street thing?
who's Main Street? But that's the problem with
How
there
many
is no crowd.
how many people here in the audience have a neighbor who's into crowdfunding? Anybody? A neighbor.
One of the things we face
Okay.
just trying to do this kind of platform, we're having trouble aggregating enough individuals for Florida funders to come to the site, because you're having to spend the marketing money on getting eyeballs. So to even get them there. And then some of our more wealthy investors were saying, I don't really want to go in and pick my own. You guys take the money and you deploy it. So we started a venture capital fund for those types of investors who wanted to put in $250,000, $500,000, where we then will deploy, 20,000 of that fund in each of the portfolio special purpose vehicles. So I think that one of the solutions is that they can syndicate alongside each other. So if you have the crowd that's putting in the smaller numbers, that helps create a base of people who want to support your product or your business. But then you can syndicate, especially on rounds, the next round after that, where they need the bigger dollars. That's one of the things that a lot of Florida companies struggle with, is they can get the initial capital to get going from some friends and family, but when they need to take that next jump to raise more substantial amounts of money, they struggle to find those types of dollars. So I think you need a two-pronged approach.
Okay, so crowdfunding and angel and venture capital. Yeah, that's actually gets to one of the questions I had in my mind about to ask whether crowdfunding is actually going to disrupt the traditional kinds of VC, because venture capital has been around now for about 40 years. And Sand Hill Road and many other places today around the world. So will crowdfunding get to that kind of level too and actually disrupt some of the traditional practices and the fees that are involved, the big fees that go to these venture capitalists who are, living on fees?
I think it's, to counter Blaine, it's negligible. I agree with that, and the crowd is not big at this point, but is very early stage still with all the money you've seen go through Kickstarter. If a good chunk of that starts coming through the equity side, I think it does start to become more mainstream as general public knows about Kickstarter and Indiegogo. And when you say the word, that's who they think of. I think as more and more companies are successful in this and more news, I think it does pick up. I'm not sure it ever becomes truly disruptive to the VC world, where it's, really affecting their business. I think they're still going to drive a lot of the business because it's a lot easier and quicker, and there's a lot of side services like the advisory that they're providing companies that you don't get from the crowd. But the crowd also has its place in consumer products and stuff like that, where the company's getting a different kind of benefit from that money.
Yeah, I'd add to that a little bit that, just stepping back, we've defined a term, the capital chasm, over the last couple of years of banks pulled back on business lending, VCs went up market. VCs can continue to own the large dollar up market that they seem to, in general, want to play in, even more so private equity in the very large part of the market.
True.
So that capital chasm is still there. That's what a lot of this sort of online, issuer-directed, platform-directed investing is intending to fill, either because of profit desire or philanthropy. So if it's filling a gap, therefore it's probably not displacing. It's probably getting more companies ready for VC.
I think they can actually collaborate very effectively. If you look at what our crowd is doing, they've taken these early stage companies that they've funded on the platform. They now have great relationships with a lot of large private equity and VC firms that then can take them to the next stage. Because if you're an investor in that early stage and they don't get that second, third round of funding, your investment, what is it worth? So you need those follow-on rounds. So that certainly can be collaborative. I also think that the people who are going to be displaced, no matter where they are in the market life, are the ones that don't keep up with the technology. I think it's the technology that is going to be the differentiator. People want ease of access. They want to view things. They want to feel that they're a cutting edge, and so if they can handle that, if they can get the technology nailed down so that they can have more time freed up to do value add, to help bring those companies along once they invest the money, I'd rather see them spending their time on that than all the back office.
Yeah, it's interesting you bring up Our Crowd, because I was going to talk about Our Crowd from Israel, and they've actually worked with Silicon Dragon with some of their portfolio companies to get them into the next level past the Our Crowd crowdfinancing model. So I think you're onto something with that, the idea of the collaborative effect. Craig, did you want to add?
I guess just piggybacking on that, as far as what I've seen in the Reg CF world, these aren't companies that are ready for venture capital yet. They're really early stage. A lot of them are really just pipe dreams, and the market sorts those out pretty quickly. I don't know what the success rate is, but it's not great. But the ones that are getting successfully funded, it's not replacing VCs. It is just a step in the structure. It's replacing the friends and family rounds and that really early stage. Let's get something going and see if it's worth pursuing further.
So what sectors do you see being impacted the most in the future for crowdfinancing? Right now, real estate is one of the key sectors. I understand energy is as well. Are there any other upcoming sectors that are going to be impacted by crowdfunding that we haven't seen yet?
What is it?
Video games. Okay.
Yeah, well, Gene has coined the term fan financing, and I think the reason for it is because if there's a dedicated group of people who care passionately about that offering, that issuer, their products, the fans, then it's a good group to tap for funding for the future. And it also points to VC funding in general is looking for particular return quantity and timeline that doesn't fit a lot of industries. Video games, movies are not terribly good candidates for VC funding. Real estate's not a very good candidate for VC funding. It's never going to have the 5x return in a small number of years. And there's lots of reasons why real estate's doing well. One, that you can see it, touch it, feel it, know it's not fraudulent. But I think the fact that there's this profile that VC needs to hit that many industries don't hit, that quote crowdfunding and online capital raising can hit, makes for a good match.
Right. So, what do you see about the internationalization of crowdfunding? Do you see that happening as well? I know we do have our crowd from Israel. Other markets that look promising for crowdfunding.
I think the Dragon Lady has the best answer for that one from
Well, I
your
do
travel schedule. I'm guessing that you can answer that question better
Well, I
than
do see
can,
some
certainly.
coming up from China. But again, it does seem that many of the China entrepreneurs that I meet want to be funded by a VC. And they want to be funded by a famous VC.
It's the credibility.
So-
the credibility.
Yeah, the credibility factor to get beyond China and to go global, which is a big trend today in the China entrepreneur story. But in terms of looking from the entrepreneur's side, if they're trying to evaluate how to get going, what are the pluses and minuses of crowdfunding, and how is that going to shift over the next couple of years? I mean, there's been this just incredible quagmire of regulations. The fact that you have to have this sheet to kind of explain all of them.
Yeah.
And it's mind-boggling. So how can an entrepreneur who's running their own business, trying to get zero to IPO, how can they even, think about getting involved in this with all these shifting regulations? What are the potential risks for entrepreneurs looking to get funded today and tomorrow?
Compliance, time, and cost, as you just hit on the head there, is usually entrepreneurs are already working till 2 a.m. and throwing all these regulations they got to comply with. Doesn't help that situation at all. But the bigger thing is the cost of capital. People aren't going to the platforms yet, at least in large scale, and saying, let's go see what offerings are on XYZ site today. It's all getting driven to the site by marketing dollars, which is a really expensive cost of capital. So if it gets to the point where people are going to seed invest, regularly to find good investments, then that cost of capital, all the money spent advertising to bring those dollars to the platforms can go down, and the cost of capital makes a lot more sense than a lot of the offerings today, where they're spending 15% of proceeds just on finding the investors, not to mention all the compliance costs on top of that.
So would it be better just to go to friends and family?
It'd be a lot cheaper.
A lot cheaper.
Well, it also hits on this idea of mainstreaming these investments.
Yeah.
Right now, you have to go to a specialty site to see a couple of investments, and you go to a different specialty site. You don't go to your E-Trade account. Well, why not? Well, because E-Trade doesn't currently choose to support those products. But some brokerage firms like ours, and I hope more as time progresses, will simply make these available as additional assets, additional asset classes that you point and click along with your publicly traded securities, and it's part of your diversified portfolio.
Okay.
For us, that's the number one risk management thing, is diversify.
Yeah, I think for our clients, when they come in and they ask, is this something we should be looking at, crowdfunding, the very first thing I look at is what is it, the service or the product that they're offering. Because if it's not sexy, interesting, understandable, easy to pitch in a way that people can immediately understand, and if they don't already have a pretty significant fan base, I mean, if they come in and they have a lot of Facebook followers, Twitter followers, they have a built-in fan base, they can turn that spigot on in a way that somebody who's just got an idea but they don't have any presence, any following.
Yeah.
The marketing dollars alone, forget about my bill, the marketing dollars alone is really precludes that early stage funding process, which is what it's supposed to be helping with.
Yeah, so you to get out there and tell your story as an entrepreneur is a real
Absolutely.
art.
It
And
is.
many of them are so immersed in running their business, and particularly if it's a tech-savvy business, there's so many aspects of it, and you have to keep up to date all the time, and you constant roller coaster. I mean, how do you how do you sort of master this art of storytelling to even get financing?
Yeah. If they could look at a strategic partnership potentially with an ancillary product or ancillary service provider that had a huge following, and they could tap into that as a way of, that would be a way to leverage a relationship effectively. So I tell them, like, you should look for a partner if you don't have that market presence.
Yeah, good point. What about the returns from this from crowdfunding? What do you foresee happening with the actual investment returns, and how do you see that stacking up against venture capital and angel investing?
I think that depends on how you define crowdfunding. So to cut it in some slices, the bigger issuers doing Regulation A offerings are probably going to have more moderate returns because they're later stage, almost by definition.
Yeah.
Whereas when you look at some of the Reg D offerings, they have the potential to be huge because they're earlier stage. But they're not so early that they don't have money or counsel. Or the Reg CF offerings probably look more like your traditional friends and family round where some incredibly high percentage fail, and the few that don't are amazing. And then there's a couple in middle along in between. So if you define the target as looks like what VCs invest in, then some combination of Reg D, Reg A offerings will probably look about the same. If you define it as what private equity invests in, then that's beyond all of the dollars that are included in this class. My opinion.
Okay.
And Reg A's
Right.
been really focused on real estate, so I don't think it's going to fit the VC mold. It's going to fit the 8 or 12% preferred return mold, and just allowing more people into that where it was precluded to accredited previously. So that's where a lot of the Reg A traction's been, and some of the later stage venture-backed type of companies utilizing it as well. But
Well, can we get a figure? Is there kind of an average figure so far? I mean, is this kind of a new development? It's only been
I don't think there's
around
enough
for a few
data.
years.
Oh, yeah.
Yeah.
Not enough info yet. Who's working on the data to gather that on the returns?
We just hit
Nobody?
the first annual filing date, so the first sets of financials are up to start getting those numbers. But at this point, there's so few that are successfully funded and annually reporting, and the ones that are only are reporting a few months. So it's hard to say. I think that the answer to that question is not going to be known for years yet.
Well, and I think
Well,
the
how many
analytics-
projects have already been crowdfinanced, though?
About
It's not-
100. If you take a look at the work of Next Gen Crowdfunding, and in particular Dr. Richard Swart, they're working hard to try and gather the data that is available. And it shows a nice sort of uptake for a new rule. It's not an explosion of applications, but most people seem to think that's healthy. If it was an explosion of applications, you'd think that there might be something wrong.
I think the analytics too you would want to look at if you are an investor and you put your money into one company on the crowd versus diversifying. So like the platform that CrowdFunders has, you have like right now 15 portfolio companies that have been invested in. If you put 10,000 in all 15 versus 150,000 in one, obviously you're hoping that you're going to get a much higher return in a segment of those. We expect 7 out of 10 to be no return at all or very, very low.
Okay.
We're hoping that of every 10, that 3 of them provide a return and 2 of them provide a really, really good return. So we look at companies when we do deal flow analysis that we expect could have at least a 10x return. So that's what we're looking for. So
That would be great.
almost all of them are tech or tech-enabled businesses.
Tech, okay.
Yes. Yeah.
So when I asked about the sector that's going to be most impacted, what is tech innovation one of the leading sectors?
Absolutely.
Yeah,
because
I would
they
think
need
so.
money and they need it early. And a lot of the people who are interested in tech, they know what those multiples can be
Mm-hmm.
if a certain tech solution does take off. That they can really, you can get some serious numbers.
Sure.
Because of the scalability of it.
Absolutely. So what about just one final question before we open to Q&A from the audience? So in the beginning, when crowdfunding was just getting a start, there were a lot of initial questions around the credibility of some of the projects that were going up and some of the groups that were behind it. Is that all sorted out now, or is it does it still need to be sorted out, this credibility issue?
I think that'll keep shaking out for the next 5 or 10 years. The startup firms will not be startups anymore, and they will mature or they will die. And we've
Okay.
already seen some firms exit over the
Or
last 4
merge,
years
yeah.
or merge, and we'll surely see more of that. That's pretty normal in a new space.
Okay.
And we'll continue to see more firms that are established taking a peek in. Right now, Folio is the only clearing broker dealer that we know of that's anywhere near this space. I'm sure someday, my forecast is Apex will be next, maybe Core, and then maybe NFS or Pershing kind of towards the end, whatever we define end as.
Okay,
I
good.
think most industries have a tipping point. So I think that as more people are familiar with crowdfunding, as more people are doing crowdfunding, there's more companies that are engaged in it. You know, you'll start to see people treat it as more of a norm. It's expected. Like, that's just another way of raising capital.
Mm-hmm.
So,
Craig?
Yeah, and I agree. I think bigger players are starting to get more interested and or involved, and that certainly helps the overall credibility of the industry. But until the whole thing hits mainstream, as far as from an individual investor's perspective, it's new, and so it doesn't feel right or safe, I think, to a lot of people that I didn't know I was able to invest in early stage companies like this. I thought that was illegal.
where liquidity gets solved. I mean, that's a huge
Yeah.
part
Yeah,
of
the whole
equation.
exit.
Yeah,
Yeah.
once somebody, you know, figures that out. then I
Besides
think-
multiple rounds of VC on
yeah,
top
I mean, I
of
think
it.
that's a game changer. I think
Yeah.
the ability to trade and transfer and to get liquidity is a big part of the puzzle that the public markets have that
Yeah.
private markets don't. So
Yeah. Okay, there's a question back here, and if you would identify yourself.
I'm Gene Massey with Media Shares. Was consulting with a client, and a guy called and said, if I put in $100, what do I get? And so that's indicative of the lack of understanding, and that's very typical out there. The thing about Kickstarter was that it started with you got something, you got a product, and a lot of people have that in their mind. And even the Reg CF platforms now, they give you perks, so you invest something and you also get a ticket or something along with it. So that's an issue that, does anybody want to address that?
well, I think that's the risk of $100. You know, I think if you have more minimums like a $5,000 or a $10,000 investment, like you'll see with our platform or our crowd's platform, it's just a different model completely. So you're not really dealing with that. I do think there's something to be said for, you know, getting something physical, tangible. I totally agree with don't do certificates that are supposed to represent the investment. But if you had some physical object that represented that you're part of that investment, a chip or something that people equate, I do think that would give people a little bit more comfort. But they have to understand that when you invest in an investment like this, it's at-risk money. I mean, you should expect it to be gone, and feel very lucky if you get a multiple or a return on it. That's the reality.
You bet on roulette, and you got to wait 10 years for that thing to quit spinning.
Yeah. Oh, boy.
As far as the perks, though,
There's a quote for tweeting.
10 years is a long
Who
time.
was the other Debbie Downer? Oh, right.
but I know one company I invested in personally. I got a T-shirt, and I know a lot more of my clients are exploring that. So it's probably a bigger issue that you're identifying there, that people do want something, and so a lot of companies are tacking on some trivial little thing like that
It's
to an
probably
investment.
smart to send a T-shirt though, because I mean that's part of the crowd is the marketing. I mean
Sure,
the ability to. I mean that's why
That's why you want something to go viral.
the
You put it
craft
on
beer
Facebook
companies
and
do so well because these are their fans. These are the people who enjoy craft beer. So yeah, let them wear your shirt.
yeah,
You have one question over there.
absolutely. Okay, there's a question. And-
And Eilers with the Eilers Law Group. Kind of a follow-up on that, maybe just a comment and you all can comment to it, but one problem I see generally with crowdfunding is that aspect where the companies that are actually doing these programs have to have something that's sexy to the retail market. So something that's an enterprise kind of based company, it's hard to give a t-shirt for a
Articulate.
back-end infrastructure project. So I think that's a real
Yeah.
tough place for this space.
It is. It is. I mean, there should be some enterprise platform,
Right.
B2B.
Yeah, and I think that's, most commerce is not necessarily going to be out of these startups that are
Yeah. And things have become a lot more complicated today in the tech world with things like artificial intelligence. How the heck would you get an artificial intelligence project funded? What?
Free bot.
You get a free bot on your Skype.
Oh, okay. Yeah, something like that. You get an autonomous driving car. Yeah, sure.
Yeah, hi, Lisa Lowe with V-Stock Transfer. You know, I'm just a comment and then I'll ask my question. You know, you were touching upon lack of credibility. I mean, I think that, like anything else, like you said, it's just a work in progress. And I think many of the people that first got into this for the quick buck realized the nefarious people I'm speaking about, realized it's not a quick buck and there's a lot of effort and time to create this. But to the point of what you were saying about giveaways and stuff, I mean, as a transfer agent, we have a wide range, industry agnostic, different crowdfunding and Reg A, you know, clients, and some of them do have that, you know, tangible investment, more of a Kickstarter play versus, you know, the $5,000 minimum investment. How do you feel? You know, my question is more along the lines of educating the consumer as well as the issuers. In the beginning, I saw a ton of education, and now I'm not seeing it as much. I'm sort of seeing, you know, I'm sure Joan can speak to this as well. I get a ton of calls, people asking me a litany of questions. And I have to say, I'm not a lawyer, I'm not an accountant, I'm not an auditor, I'm not a broker dealer. I can answer, you know, I can answer a lot of the questions from experience, but, you know, where do you think the education aspect of this is going outside of rooms like this? Just
Yeah,
That's a
from an
good question.
education piece.
Yeah.
sure.
Yeah, no, I think it's very disparate right now. I think there's pieces of information, not all of it's accurate. You have to go to one place for this, then it doesn't sound like that. And it's also been, a lot of it's been a moving target. You know, we're still, just even within the company that I work with, we're still like, we're 506B, so we're still under a pretty standard, but we have a, you know, web-based platform. You know, should we go to 506C? It was actually super helpful to hear some of the feedback today about maybe that's not the way to go. The SEC no action letters are only so helpful, and they don't give you a lot of clarity, frankly. And so that's extremely frustrating. So part of the inability to answer questions or to put education out there is there isn't a black and white answer. And that's why you get this confusion in the marketplace, and that degrades credibility. The sooner that we can get absolute clarity from the SEC and as a market on what the rules are and what's okay and what's not okay, this is more credibility that we'll have as an industry.
That's a good point. Time for one last question? Or?
Yeah, last.
Yeah, okay, one last question.
Joan Dromey from ComputerShare. I want to go back to something that you said earlier, Craig, about companies that you're working with not being prepared for some of the costs involved, and the cost of capital being 15%. Now, once upon a time, I did a fair amount of raising private equity. Equity is the most expensive money you can buy. And I don't think the cost of that capital has ever, in reality, been much under that level. So do you think that the problem is that many of these issuers have read about crowdfunding or read about the Jobs Act, and they wake up in the morning, they think, oh, if I build it, they will come. Magically, they'll wake up in the morning and think, I'm dying to buy a private placement today. But maybe I'm wrong. But I feel like from what I've seen, issuers aren't prepared for the cost of raising this money and creating this engine. But I'm not sure whether there are, I don't think there's any quick or easy solutions. I'm not sure what the solution is. So.
Yeah, I think the solution is probably just every one of us continuing to tell them that and try to make them understand that, because certainly explain, you know, this isn't going to be quick, easy, or cheap to about everyone I've talked to along the way, and I don't think they listen to me.
I guess I'd have two different perspectives on that. One would be, you could reasonably say that crowdfunding is simply the technical disintermediation of investment bankers.
Oh, yeah.
And investment bankers played a role of talk to the company, teach them everything they needed to know, hold their hand, answer most of the questions, do that. By taking most of the investment bankers out of most of the equation, there's a gap. And the gap, if the rules were crystal clear, you'd just put it on the internet. Hey, these are the rules, this is the checklist.
Right.
They're not crystal clear. And so the second, call it a wish, a dream, is our securities laws are from 1933. That's the structure, that's the framework. And we've added a lot of stuff onto it to try and meet one need or another need or reaction to one crisis or a different crisis. I don't know if this is the time in our political history. I don't know if there's a driver to sort of push it over the edge, but we probably ought to, in tech terms, you say you refactor the code. Just start over and think of our securities laws as a sort of single law that's a spectrum of reporting based upon size or some factors, that when you're very small you do very little if any reporting, and when you're very large you do a lot, as opposed to a patchwork quilt of well, maybe I'll do a Reg D, maybe I'll do a 506B, maybe a C, maybe an A, maybe a 504, maybe a 1001, maybe an S3, maybe an S11, maybe an S1. Those are just the ones I remember off the top of my head, and there's so many more. One securities law that sort of has a spectrum of reporting requirements and other types of requirements is a dream that I think we could see in our lifetimes.
So rule number 1 with crowdfunding, keep talking about crowdfunding until it really goes mainstream. No, okay, keep talking. Okay, Sydney, thank you very much. Thank you all, the panelists.